Now, what is the fourth part? Cash operating cycle. Fourth part is cash operating cycle or cash conversion cycle. We can call it cash conversion cycle. What does cash operating cycle mean? Cash operating cycle means it is the length of time between cash purchases and cash collection from the customers. So basically, if you take the length, it is the length between the purchases and collection from customers. So this is the cash conversion cycle. So in order to calculate this, what we have to do is we need to identify the inventory holding period. We should know inventory holding period. Then you need to add the accounts receivable days. From this you need to deduct accounts payable days. So now, as we have already calculated the raw material holding days, 92 days, and also you are given inventory holding period for work in progress and finished good stock. So raw material is 92 days and work in progress 10 and finished goods will be 13 days. So therefore, straight away we can take the inventory holding period 92 days plus 10 days plus 15 days. So that will give you, sorry, this should be 13. So that will be 115 days. Now accounts receivable days we calculated here, that will be 114 days. So this will be 114 days. Accounts payable we calculated 48 days. Sorry, 48 days. So if you deduct 48 million from inventory holding and accounts receivable days, that will be 181 days. So this will be the cash operating cycle in days. Then the part B requires you to draw a diagram to show the cash operating cycle. So let's quickly move on to the part B. This is part B. The diagram to show the cash operating cycle. So as I explained you previously, cash operating cycle means it is the length of time between the cash purchases and the collection. So therefore let's take, this is the raw material purchased, and let's say this is payment received. So in between we have to settle our suppliers. So let's say this is payment made to suppliers. Then goods sold. So within how many days you settle your suppliers, which is 48 days. So let's say this is 48 days. Then the stocks stocks are sold after how many days? Stocks are sold after how many days? So your inventory holding period is 115 days. So therefore, stocks are sold after 115 days. So until such time stocks are held. Then after selling goods, within how many days you collect the money? So you collect the money after 114 days of selling the stocks. So which means 115 plus 114, so that will be after 229 days only you collect the money. So how many days your stocks are held? For 115 days. So this is your stock inventory holding period, 115 days. So this is stock holding period, 115 days. Then what about accounts receivable days? So that will be 114 days, this period. So this is 114 days, this is 115 days. Then what about your accounts payable days? Accounts payable days will be 48 days. So this is 48 days. So this will be accounts payable days. Then your cash conversion cycle can be drawn between the payments made to suppliers and the collection receipt from the customers. So basically this will be the cash operating cycle. So this will be the cash operating cycle, which is 229 minus 48 days, so 181 days. So basically this is the cash operating cycle shown in a diagram. As you can see from the diagram, the cash is tied up for 181 days. So cash is tied up for 181 days. So what action a company can take to lower the cash conversion cycle? So in order to shorten this cash conversion cycle, the company can speed up the collection process. So here it takes 114 days to collect the cash. So therefore they have to speed up the collection process. And also you can slow down the payment to suppliers. So what they can do is they can slow down. So rather than paying within 48 days, so you can negotiate with the supplier to extend this either to 60 days or 90 days. So by doing that, you can slow down your payment to suppliers. Therefore, by speeding up the collection and slowing down the payments to suppliers, you can lower the cash conversion cycle. So if a company can lower the cash conversion cycle, it will be more healthy for a company to run its business operation without any working capital issues. So with this, I will conclude my discussion on working capital management. If you like the video, please click the subscribe button and click the notification to watch more videos on accounting and management accounting. So thanks for watching. I will see you soon with another video. Bye for now.